let's say company A, let's say it's Medicaid, paid me 1.5 million. Company B paid me 200,000. Company B paid me 300. That's my 2 million. At the end of the year, they send me 1099 because they have received payment from the insurance themselves, and they have to decide who they paid the money to. So they notify you that, hey, and the 1099, we paid your company ABC 2 million in total. And then they go also and send their copy to Social Security Administration that, hey, we paid this company 2 million. Now, when you submit your W-2s and your W-3s, it kind of need to make sense in the sense that if you received $2 million, everyone knows that you at least 60-70% will go back to payroll. You are a staffing company in this business. For every $1 you receive, you should have one worker providing services for that $1. All right. So when that's the case, let's say 60-70% goes back to employees who are W-2, 1099, or whatever it is. But at the end of the year, you notify Social Security Administration, hey, I paid 65% of all the money I have received in W-2s or in W-2s and reported and summarized in W-3. If they make sense, okay, you got this much money. We know you got this much money because we paid you this much money because we paid someone else who paid you and they told us they paid you. Okay, so they're like, okay, that makes sense. He had so many workers, pay them in 1099 or W-2s, and this is the summary. This is how much he paid. That makes sense. 70%. Okay, we can live with that. The rest is the other business operations. Okay, so if for some reason you notify Social Security Administration that you only paid $500,000, you are mistakenly thinking that the people who paid you don't report back to Social Security what they paid you, and that's a bad mistake to have. Okay, so everyone knows the numbers. I mean, people who put the budget together know how much wages costs, and that's what they're paying you basically, plus a little extra for you to run the business. So that's the W-4, W-2, and W-3. Now there's something called 941. And 941 is what you report every year, every quarter. I apologize. You report 941 quarterly. Every quarter, you tell the federal you notify IRS that, hey, the last 3 months or I think it's 4 months, the last 4 months, this is how much money I paid. This I paid to my workers. This is how much money I paid in income taxes, and so on and so on. There are 4 quarters, and they add up to your W-3. So your W-2, your 941, and your W-2s match that way, right? So they need to match exactly. And in every, if you fail to take into account that math, you could be in trouble. And then there's something called 940. That's unemployment. I'm running out of time. Unemployment for the federal tax. 940, you must file at least once a year. Then everyone knows about the I-9, employment eligibility verification. Everything that happens is because you have verified someone, the identity that they are authorized to work in the United States. So you have done all of those things. All right. Again, in addition to the federal government, states also have all of these forms. So keep pushing. I will try to make another video of the consequences of not doing these forms.